Aloha, I'm Robert Howe. I'm the managing director of Akamai Capital in Honolulu and the CEO of Geomatrix Hong Kong Limited. People ask me, what's it like to have offices in Honolulu and Hong Kong? Two island paradises, Hong Kong, New York on steroids, and Honolulu, New York on quaaludes. And sometimes you need a little bit of both. We've been managing money between the two organizations now for over 20 years, and myself 60, almost 60 years. So the usual disclaimer: past performance is no guarantee of the future, but we're going to show you the past and what we hope will be a bright future. Why invest with Akamai and Geomatrix? This is our agenda: who we are, our performance, how we got to it, and the team behind it. So why invest with Akamai and Geomatrix? Well, our returns are superior to and uncorrelated with the indexes. We are global versus the US. The US dominated world markets for almost 2 decades. That is changing. It has less to do with geopolitics than with AI spreading globally and lifting the profits of non-US companies. And we focus on profits. It's a hedge strategy. So when the market takes a tumble, hopefully we don't fall as much. So don't lose money in bear markets and make as much or more in bull markets. And we have an Akamai initiative, a purpose. So this is about profit, protect, and purpose. So what's Akamai? We've been running this for 20 years, a finance academy to train the students here in asset management to compete with the Princeton Eating Clubs for the top paying finance jobs on the planet. We've placed 60 young people and changed the trajectory of their lives over the last 20 years. It creates a talent pool for those who stay behind because they're returnees wanting to start asset management in anywhere. With the internet, you can run money from anywhere unless you're a high frequency trading program. We're not. We're long-term investors. And we're starting to launch some of these graduates to have their own strategies and build a small asset management industry here. We're not big. We've been registered in Hong Kong for almost 3 decades now. We've been inspected 4 times. The master fund we're recommending is small. It's family and friends. And we also seed new strategies from people that we trust. We'll talk about a couple of them. Wickham is Hong Kong deep value small cap. The India fund, India has been a top performing market globally. And it's a live lab. The main strategy that I spend most of my time on is the graduates work on it in the Akamai Finance Academy. We also have some assets from a private equity fund in Japan. It's not really part of this story. So what are the strategies? It's basically 3/4 the strategy that the graduates and I and my partner work most on, and then a little bit in the India fund and the Hong Kong deep value. And as I said, we're starting to seed these graduates to launch them into the market. So we've outperformed handsomely over the last 4 years, but I want to draw your attention to 2 downdrafts in the market. In the first quarter of 2025, there was the tariff tantrum, as it's called now. And markets fell into a bear market briefly, but we were actually up in that quarter. If you go back to the 2022 bear market, we were actually up handsomely. So we're going to be a counterweight, long-term outperformance, but a smart diversifier as well. So how do we manage that 3/4 of your assets? So we buy companies long with rising earning forecasts, rising ROE, and the opposite. We sell short the ones that are underperforming on this. Look, we consider valuation, but we've just found that profit momentum is the key to stock prices. Let's give you some examples. You probably know Alphabet, which is Google, and they dominate now in AI, in the internet, very strong earnings momentum, rising profit forecasts. And this is what drives share prices. We'll show you again and again. Advantest is a testing company in Japan, and huge demand from high bandwidth memory to test that. Still a very cheap stock. Again, rising profits and the surging demand means a rising share price. Now, a theme that we're big on is humanoid robotics and non-humanoid robotics. And the Chinese dominate, and they're starting to get some major contracts. Now, again, rising profit forecast. Now, the stocks is not cheap, but these are really the only game in town. This is a long ignored Chinese social media company, got to be very cheap. And again, they're starting to really get traction with the younger generation. And if you look at that candle on the far right in orange, that's a breakout. That's a very good technical signal. So again, these colored lines up top are the earnings forecasts of all the analysts on Wall Street. And basically, you want to be going from the lower left to the upper right because the orange candlestick share prices always follow it. China is becoming investable again. I'll show you our weight there. Aviation's been a big play, both commercial and particularly defense. And this is a company that's picks and shovels, some parts. And again, they've done very, very well. We've been along this one. Financials are a big theme we'll show you in our portfolio. Citigroup has been the laggard in this sector, but what's happening is they're getting more efficient. They're cleaning up their balance sheet. And again, the prices have really surged recently. Across the Pacific and Japan, the banks were really the core of the financial crisis there. They've cleaned up their act. Balance sheets are strong. And as interest rates go up in Japan after a long time at zero or negative, they make more profit. And you can see we're also the theme of the AI users in finance are the real beneficiaries in terms of labor savings. So let's talk about our short book. We've been short Tesla a long time. It hasn't yet worked for us, but we're looking at the ground shifting under their feet in electric vehicles. The Chinese just dominate in robotics. But he's a charismatic man, and the stock is very expensive. And we think eventually the emperor has no clothes. This is a box maker that takes the NVIDIA chips and packages them up and really has no barrier or, distinctive moat. And the profit forecasts are falling. It's a cheap stock, but it doesn't really matter. It's a value trap. So let's look at our exposure overall. So we are 271% gross. We're 203% long and 68% short. And so your money's working harder. We're making you money both on the long and the short side. And we are short-term bullish at net of those two positions. We're 130% net long. We are in a primary bull market that's spreading from the US to other countries in the world. It's a very good time to be invested. What's our country exposure? We're actually very bullish on Japan. We have no shorts there. China, the same thing, no shorts. Germany, the same thing. We are slightly net short the US, but that's in technology and the index futures. If we look at sectors, again, financials, they're the benefits. The makers of AI are basically giving it away, and the users are the ones who benefit. And the biggest users with the most white-collar labor is financials, insurance, and banks. And they're already starting to jettison employees, and their profits are surging. We also are bullish the yen. It's at 160 yen to the dollar. Both the US and Japan are intervening. It's the cheapest currency we've ever seen. Those of you who have visited Japan, you know what I mean. So let's move to our sub-funds. Basically, we like India, we like China. It's the only market to outperform the US over decades. There's a rule of law. There's both cheap and very educated labor. Those of you in finance probably know lots of Guptas and Singhs who are very smart. Japan, that 35-year bear market, when I was starting working for a previous company, I experienced the bubble and then the bear. And China has just been hated. It was called uninvestable, but it's bottomed and it's really turning into a technology powerhouse. Europe has been here's where maybe geopolitics comes in. They're forced to defend themselves, and they're also starting to adopt a lot of the profitability of just management techniques and particularly AI. And there's a market pro in each market, and I basically overlook everything, but I give plenty of rope to my professionals. So we were founded in 1996, Akamai about 9 years later in Hawaii. Before that, I ran AIG's money in Japan, and then before that, Japan and Hong Kong for T. Rowe Price. And before that, I was a technology analyst in Baltimore and had a lot of fun with that. Data resources was one of my first real jobs, and I was doing econometric forecasting, so was interested in quant and macroeconomics. So 2 Ivy League degrees. I hope I'm still a nice guy. I really do believe in the value of the chartered financial analyst, was a co-founder, and lots of awards for top performing funds. That doesn't really matter. What matters is what I could do for you next. Mortis has been my partner for, 30 years now. He was first a quant with us, but he's really blossomed. He's our director of research and does the main trading. Really knows technology, automobiles, tech, AI, and a chartered financial analyst as well. So who are the sub-fund managers? At Wickham Capital is Hal Thomas. Circa India is Ambar Tanej. I've known them a long time, and we've just launched a small fund for Hal. It's kind of a short-term trading fund. And then we have 2 of our graduates are managing just a very small amount, which then builds them a track record, which they can raise money from family and friends locally. So just quickly, the India fund has basically matched or slightly outperformed the index in India. And it's after long periods of great markets. This last year, the market was basically flat. So just quickly on his team, Ambar has been in the financial markets for 22 years, a storied career, run money and performed well in his previous firm. 3 offices. Wickham has outperformed the small cap index. It's lagged the large cap a little bit, which is often happens as the markets turn. Eventually, the small cap will catch up, but it's been a 5-year bear market in Hong Kong, hated, and the P's for that market fell to about 7, which has never happened before. It's recovering. Hal's also been a veteran of Hong Kong, he's been running this fund now for the main fund that he manages. Wow, gosh, it's 16 years now already. He ran the desk at Credit Lyonnais, one of the best brokers in Hong Kong. And good fun. And this is our shareholding structure. We don't need to go there, but you can look at all this. We have a PDF version of it on the website, or you can contact us. So we are basically, the idea is to diversify yourself globally. Don't have all your eggs in the U.S. basket or all the eggs in technology basket, and have a hedge structure so that when the markets do have a downdraft, you do well. We're veterans. We've been doing this a while, a proven track record. And visit us in either of these island paradises. We'd love to talk to you either by Zoom or phone or in person. Aloha.